All right, welcome back to the channel. We're going to be going over the SP 500 specifically, and we'll be doing a little bit of the Nasdaq, but I want to focus on two key bullet points that just kind of ran across the desk and things we need to be looking at over the next few days. We're not going to spend too much time in this video, but I'm trying to give you the best content and things you need to be looking out for over the coming weeks and months. So like, subscribe, do what you got to do. Let's get to it. Now, before I get into exactly what that key indicator that just triggered, I want to go over what Yellen said, U.S. Treasury Secretary. She has constantly been claiming that the U.S. is a very strong economy, and it seems like this is what all the Fed members are saying, and that we can handle this, But then it always comes back to the backpedaling and the reversion of what they're saying to kind of cover their tracks and saying it's tricky, mostly due to inflation, which they're trying to blame on other countries and things like that. However, she goes on to say this, particularly in Europe, which is the most vulnerable in regard to the Ukraine crisis, I would worry more about the recession prospects. Now, if we go back to Europe, you can also see that, yes, Europe is heavily affected by these gas prices and oil prices. And this is a very big thing that we have to be watching as investors, because if it affects Europe, chances are it's going to affect America as well. Now, not specifically with the gas prices, we're not going to rise as much as them. However, their economy is going to indirectly affect our economy. So coming back over to the S&P, and this is the chart that I really want to watch for today. This is going to be the monthly time frame. You know, this is a little bit broader of a viewpoint, and as we look here, it doesn't look so hot. If you're really looking at this, what's happening, you are getting that initial rejection at that top, roughly a double top at this level, an engulfing monthly candle as well, pulling you back down to the downside. Now, these aren't the worst candles you're seeing here, but you're also seeing a triple rejection at this around 4,600 level on SPY. And when we continue to look at this, what really concerns me is the pattern you're now forming. You are getting somewhat of a flag, which indicates more potential downside. And the ultimate indicator on top of this is when we take a quick zoom out. Now, I'm not a huge fan of MACD, but MACD does help you give a broader perspective on overall trends from a larger time scale. And when we're looking at the monthly chart, you really start to zoom out when this has happened. Every time you've gotten some of this crossing on the S&P 500, what is happening? So when you come and really look, we're just going to highlight some of these key bullet points. You have yours, of course, right here. But we're just going to highlight some of these key instances where you got this crossover. And as we come in here, you're going to see what's really been happening. But it's also been acute to start finding some of that bottoms to make some of those great gains. 2020 being a case of that. But as we zoom in here, let's just quickly look. Now, 07, 08, that's going to be your big boy. Everyone remembers that crash, and that's when you started absolutely getting hunted. Everyone was getting railed here in the market. You had a drop roughly from 1,500 all the way down to about 700, over a 50% drop in the entire S&P. Now, pushing back up, where was your next one? A lot less steep, about a 2-month drop overall with some consolidation. You dropped roughly from 2,100 down to roughly 1,800. Still a steep drop. It hurt, but you obviously got back to where he wanted to be very quickly. Going to 2018 and 2020. This is where you had your first cross down, and a lot of people thought this was going to be bigger and steeper. However, you saw we were able to push our market back up. They started cutting on some of those rates, and that helped the economy overall. Now, you saw you get that steep drop from roughly 29 all the way down to roughly 24. Everyone remembers this time during Trump's presidency. It was a very big day for stocks, and it was one of the most volatile days in history. Now, then you have the 2020, and this is the most controversial, if you will, because during this time, obviously, it was a COVID scare, world crisis, anything can happen. But you saw what happened. You dropped a lot, and it was really pretty much in a very short period of time as well, because it was near the end of the month going into the beginning of the month as well. So from 3,400 all the way down to 2,100. That was a steep one, and you really start to get hit there. But now you're getting more of a cross. And if you look at this MACD, you've never really been this high. You've been ultimately looking at this thing from a clear bull trend overall, just trending to the upside. So if we really look at what's going on here and looking at some of these key bullet points you need to be looking at, it tells me that we're probably going to be seeing some more downside. And if we're looking at what's happening here, it's looking like you're trying to lose out this bottom support here as well, obviously breaking the 4,000 range as well in the S&P. And as you look here, this is your first kind of multi-trend that you're getting here. So when you go back to here, these are all really steep drops, one just immediate steep. Now back in 2008, 2007, you saw this drop, came back up, and then drop again. That's what it's looking like is really happening here on the S&P. And as you look here, it's looking like a continuation back towards the downside. Now, I think the S&P is going to be retesting this key zone here. I think that will be happening very soon, and people need to be looking out for that. But the question is, if you break this, where's your next major support? Now, for me personally, I'm going to have to say you're going to want to be looking for these previous highs that you had before, the lows that you started conquering, and then the previous highs that you held for so long. This is going to be a very big range. That's the problem when we look at this, is how big these ranges can turn out to be when you're looking at something like this, because it's been such a long-term high. This would be over a 50% roughly drawdown on the market, which back here we saw almost a 50% and over 50% right here. So it's not impossible, and it would come right back down towards this trend line. So what are the key signs we're looking at here? Now, guys, again, I'm going to continue showing and forcing this down your throat because it's going to help you so much, and it's the ultimate indicator for looking at this type of caliber pullback. And it's going to really show you how we're overall moving. And this is the yield inversion. People are showing the 2 to 10 year, the 2 to 30 year. I don't care about those. This is the big one, the 10 to 30 year. Now we're seeing the 30 year getting devalued. We're seeing the 10 year. It's surprising how long it's taking to start to invert. You're having almost everything else inverting besides the 10 to 30, and it's getting right back to that point. And what you're also seeing, which what we covered yesterday, is you are just now seeing those rate hikes, which when we go back towards 2017, that's when you started spiking, was when rate hikes started coming in. You're already spiking prior to even getting those rate hikes. This is very concerning overall in the market. And if you look at this with the S&P, it's lining back up to show you that we're setting up for a world of trouble and a world of pain. Now, what's the downside here? What's the downside to being a bear in the market right here? You potentially miss out on some sort of profits in the near term. Let's say you miss out on getting your perfect entry. But the reward potential here far outweighs the risk to betting onto the upside. Because if you are right, then you are going to be able to get into all your stocks, your favorite place, at very low prices. And that's why we're seeing companies like Nvidia. You're seeing all these other big, great names kind of diluting right now. They're diluting their shares, diluting their stock. They're doubling down. They're doing stock splits on Amazon, Google, all these to get more capital so they can make the acquisitions on these companies when the stock market starts to tumble. And I don't think it's a coincidence. So looking at the S&P, how low can this really go? The question is really going to come right here. If you start to break below this 4,000 range on the S&P, it's going to get brutal. I promise it's going to get ugly. It's going to get brutal. And we'll continue tracking this. That's not to say there isn't day trades that you can make. And that's how I'm making my money right now, is slowly getting in and out of positions throughout the day, finding the volatility, because that's one thing you're getting here is volatility based on the VIX. You are getting decent level volatility. I mean, look at these monthly candles on VIX, up and down, just monster wicks back and forth. This is what you want to see for as a day trader. And so this is good, but you need to be careful with your longer term positions, because I do project you're going to get a VIX spike in the near term future, and it's going to start ramping back up. Not quite as much as we had during COVID, but it is going to start spiking once again. As far as the video today, that is going to wrap it up. I do ask that you consider liking and subscribing. It helps out the channel tremendously. Every day we're either giving you educational content or how the market is moving, and we are having the 5,000 day trading challenge coming up this Sunday, which I'll be going over the key trades I'm taking every single week as you guys see fit, and you will be able to follow along and actually track how we're using the educational videos to grow this account for real. And this is no paper trading, anything like that. I'll be following along specifically with the TD account. Again, like, subscribe, do what you gotta do. More content is coming. Have a good one, traders.